We value the trust that you've placed in us and the relationships that we've built together, and we are very committed to strengthening those relationships every day that we work. With more than 200 offices in 70 countries around the world, we do about 25% of our business in Asia Pacific, 30% in Europe, and 45% in the Americas. So we have a very good viewpoint and balanced perspective on what's happening in real estate markets globally. Midway through 2012, the cyclical recovery in real estate markets continues, but at varying speeds in the different parts of the world. Investment sales and leasing activity are still in the early stages of the upswing. We saw momentum building as we entered 2012, and although that has slowed more recently due primarily to concerns about the euro. On a regional basis, Asia continues to lead the recovery. The Americas and Central and Eastern Europe come next, with Western Europe lagging. The euro crisis has had a direct impact on the availability of real estate debt in Europe and a more muted effect on credit availability in the rest of the world. So what does this mean for real estate demand? It remains strong across Asia, both in investment sales and leasing activity, with only a couple of exceptions. In Hong Kong and Singapore, rents have begun to fall due to slackening demand in the financial sector. In Europe, demand for space has slowed significantly as companies delay making commitments, and the lack of liquidity and business confidence slows investment sales. So, with the exception of some very large markets that qualify as safe havens, London, Paris, and the major cities of Germany and Switzerland, for example, we see leasing and capital markets activity down 25% from last year. In the US, there is strong demand for quality assets in all market segments on the west and east coasts and across the Sun Belt in the south and southwest. For the full year, we anticipate that US investment sales will be flat year on year, with leasing activity down slightly. But the big question on everyone's mind is how and when the euro crisis will be resolved. The situation certainly is troubling. A monetary union without a fiscal union, and not much in the way of discipline among the widely diverging economies that make up the eurozone. But recent events in Greece, Spain and Italy have generated unprecedented political will across the continent to come up with a solution. I lived in Europe and the eurozone for 25 years, and I have never seen European leaders communicating so frequently, so intensely, to find a way through a crisis. I believe their dialogue represents the first step in growing political integration across the region, which will then lead to fiscal and monetary alignment. So generally speaking, I'm optimistic about progress on the situation. Stepping back to look at market conditions in general, the good news is that the world is in the second or third year of what is likely to be a 6-year cyclical upswing. It may not be quite the recovery we would all prefer, but most companies are trying to push forward and are not looking to slow things down. I think we can all take advantage of opportunities to make the best possible progress in this market setting, approaching markets with realism and confidence, but always having plans in reserve should conditions change abruptly. That's certainly what we're doing at Jones Lang LaSalle. We're continuing to invest to keep on expanding our ability to serve our clients wherever they have real estate needs. Looking to the future, demographics, economic projections, and our own experience all show that emerging economies will have a major and growing place in these plans. We already have industry-leading positions in the 4 original BRICS, Brazil, Russia, India, and China, and the celebration of our 5th anniversary in Turkey offers a good example of the importance we place on and the plans we have for this and other growth markets around the world. Looking at Turkey specifically, our optimism seems well placed. While GDP growth has slowed from the very high 2011 levels, it's still projected to increase by more than 3% this year, well ahead of European averages. Occupier demand is strong in both retail and office markets, and investor interest is growing, and in addition to retail, there's rising interest in investing in office and mixed-use development projects. The growth potential of the Turkish real estate market is clearly illustrated in our recently published Global Real Estate Transparency Index. This research study measures transparency by assessing the availability of market data, clarity of transaction processes, increased participation of institutional investors, and other metrics in some 97 markets around the world. It shows Turkey recording the greatest improvement in transparency in the past 2 years. With capital sources around the world demanding increased transparency, this is one example of how markets like Turkey are taking their place on the global stage. In our own operations in Turkey, having established a very strong position in the retail segment, Avi Alkas and his team are now focused on strengthening our positions in office leasing and tenant representation, in capital markets activity, and in the project and development services to support local and international clients.
The sovereign debt and Eurozone crisis is certainly the hot topic of 2012. In that environment, some markets are perceived as the safe haven because of their size, like London, or because of their overall economic performance. Turkey is still standing out with its economic performance, though surrounded by a lot of countries who are facing tremendous challenges, either because of political circumstances or because of their economic challenges. Turkey is the leader within that region. I just attended a World Economic Forum conference taking place in Istanbul, and I was really impressed how Turkey is perceived as the regional leader for the Middle East, North African countries, and they all look to Turkey and the success stories of the last couple of years. This will certainly influence the Turkish real estate market, and we will see more international interest to invest in Turkey.
Turkey continues to be the power and the hub and the influencer for retailing around Europe. The new shopping centres, the new retailers, the expansion of retailers into Germany, into Poland, really, really strong. But there are winds of change. As we move into 2013, we may see the influence of the new lease legislation. We may see the influence and the need to upgrade shopping centres, to continue to keep ahead. So whilst we sit on success today, we need to watch out for change and invest in change to ensure that Turkey stays the most powerful country in retail.